Hey guys, welcome aboard. Glad to have you here. So I'm going to talk today about your trading mindset. That's what we're going to talk about today, trading mindset. And the reason why we have to talk about trading mindset is because there are three things that you need to have in order to make money as a trader. If you want to have consistent profits, you really need to have three things. And those three things are, as we know, a profitable system that fits your beliefs, that you believe in, and that actually makes money. We call that, has a positive expectancy. We've talked about that in the other videos. You can go back and watch that and see those in the other videos. Number two is you actually have to have a risk management rules that are going to fit your goals, what you're trying to achieve. Now, we're going to talk about this in the Small Account Big Profits course, of course. But we'll talk about all three of these things. But this risk management thing is quite important because what happens is this. If you choose an algorithm for your risk that is too aggressive because you're looking at the pleasure and not the pain, you're looking at, I want to make this amount of money, but you're not really considering what can happen in the losing streaks, then you're likely to quit because you're likely to hit some losing streaks that you didn't anticipate and that are actually probably going to be too hard for you to ride out. And so the risk is really critical because that can affect your psychological experience as a trader. If you get the risk wrong, that's really going to hurt. It amplifies it though. Like you and I can trade the same system. I might be very aggressive, so my equity, it goes up and down like this, and yours is a little bit smoother because and maybe flatter because you are using a less aggressive risk management algorithm. So you're not using the same aggression or you're not really going for it like I am. For example, as an example. So that's really important to understand, is that it's really the risk management that amplifies your system, like a audio amp. When you hear someone playing a guitar, it can sound quite nice, but when they plug into an amp, it sounds completely different. So that's really important to know. And then the last part of it is mindset. And the longer you do this as a trader, the more you understand mindset. It's all about your mindset. It's 100% mindset. When you work it out, it comes down to mindset. It really does. And the reason why it ends up being mindset is because you are the executor of your strategy. Unless you have an automated system, and even if you have an automated system, I'd argue that you are the executor because you flip the switch, you turn it on and off. You're the ultimate, you're playing God with your automated systems. But we'll put those aside. You feel responsibility for your trades because you're the one taking them. It's the system. The system rules are telling you what to do, but do you follow those rules? And why don't you follow your rules, or why do you? That's the psychology. And I know if you've been doing this for a while, you're like me, you understand this is a psychological game. And that's why today I'm going to give you 3 hacks that you can use in your trading. And what's important about these hacks is that they're the sort of thing that anyone can use depending on the situation you're in as a trader. So different types of traders are going to identify with one of these. And in the Small Accounts Big Profits course, we're going to talk all about multiple ways that you can improve your psychology. But today I'm going to give you 3 that you can walk away with, and this is going to help. So number 1 I want to talk about is related to this chocolate company. So this chocolate company, they make the chocolate in Australia, where I am. But what's interesting about it is, it's one of the small bars, the expensive ones that you get. It's not much chocolate, but it's really expensive. And they've got this great wrapper on it. Tells you all the story behind it, which is we use Swiss milk and butter and fine sea salt and Peruvian cacao and Dominican Republic cacao. Now, mind you, this is made in Australia. This chocolate is manufactured in Australia, but they bring the milk over from the cows in Switzerland. They bring the butter from Switzerland to Australia. Now, I don't know what's wrong with the Australian cows, but apparently the Swiss cows are way better. And they talk about how it's made by master chocolatiers using the finest organic and fairly traded cacaos, conked for up to 3 days. Conked, I think is how you pronounce that. Our chocolate doesn't, if you can't pronounce what's on your chocolate, it's an expensive chocolate. does not need emulsifiers or other additives. It doesn't use cane sugar. It uses coconut nectar. It's got low GI. It's delicious and subtle, warm flavor. All this stuff, right? Here's the thing about these guys. They are committed to making the best chocolate, or at the very least, they want you to think that you have the best chocolate, right? So that's why they're telling you the story about the Swiss milk and butter and all that. Commitment equals success. In trading, if you want to make it happen, commitment is the way to go. It really is the way to go. There's no success without commitment. I would argue that. You need to know really what you want, and then you can pattern your actions after what works. And you understand that if one person can do it, many people can do it. If one person like Larry Williams takes the $10,000 account in 1987 and he ramps it up to 1.1 million, actually went to 1.9 million, but when the trading was over, it was 1.1 million because he was in a drawdown of 45%. If he can do it, many people can do it. His daughter took $10,000 to $100,000. She did it. So what you need to do is you need to know when something's working or not, right? And then you change your behaviors until you get what you want. So it looks like when you see successful people, when you see successful traders, it looks like that somebody has a lot of willpower and discipline, and that's why they're a great trader. Ha ha ha. No, it's not it. It's because they're committed. It's because when you're committed, you will show a lot of determination. You will become disciplined. You will backtest your strategy every day, even if it's only for 10, 15 minutes. You will treat this like a job and not like, picking horses at the horse track or whatever. You understand probabilities, and you understand the value of changing your mindset so that you have a really positive mindset. And you understand what it takes to actually make money in this game. It's just a game. Like anything else in life, it's a game. In science is a game. You understand, if you've gone through and done like a statistics class, right, in university, you understand that science is a game. How does it work? There are many different. I used to teach research methods in psychology at the university, but basically there are many different ways to run a study. But usually what you do is you have one group that gets the placebo, one group that gets the treatment. You test them before, you test them after, you run the test, and the game is the statistics. See, what happens is the numbers pop out, and the numbers tell you, yes, you have a winner, or no, I'm sorry, we don't have anything here. It's just a game. Same thing with trading. You come up with an idea for a system, you run it through Forex Tester, you do hundreds and hundreds of trades if you're committed, and if it turns out that the system actually makes money, guess what? You can move it on to the next step, which for me is usually small account trading. You can use demo account, but you can use a very small account as well and see if it works well there. You just keep ratcheting up. It's a game. If it falls apart at the seams at the testing level in Forex Tester, then throw it away. But it's about cycling through different systems, finding something that works. That's commitment. It looks like you're being very disciplined and you got lots of willpower and all this, but really it's just deciding that, you know what? I want to do this. I want to make this work, and so I'm going to do it. So that's number one. Number two is understanding that anything that happens is your responsibility. So I had a trader friend, and he did really well. He would make a lot of money every day, and then once in a while he'd have a really catastrophic loss. And I believe it was more due to his mindset and to his way that he approached risk than anything else. I don't think you could blame his system. I don't think you could blame his broker, but he actually blamed both. He actually tried to convince me to open up a trading account because he said his broker was out to get him. He's like, and I said, no. He's like, open up an account under your name, blah, blah, blah. I'm like, why? Your broker's not out to get you, He knew the guys at the brokerage. They're not out to get you. But what's happening here is when someone says, look, I lost here and it's not my fault, you've become a victim. You're now a victim if it's not your fault. I have another friend. He is always suing people. He's always suing his business partners. He's always suing everyone. He's always saying, I'm the one that was wronged here. So here's the thing though. If you're the victim, who's responsible? If you're the victim, if people are always trying to go out and get you, then where's your role in this? You're not responsible, are you? You see, as soon as you take responsibility, you're now a trader who has choices. And if it is choices that you have that you're responsible for, then you can change. You can choose to change. This is something I'm trying to teach my little kids. If you have kids or grandkids, you've probably seen this. They'll get really worked up and they'll say, oh, it always happens to me and this and that. And I explain to them, no, it's about you and what you choose. If you choose this, then this will happen. If you choose that, then that will happen. If you make better choices, you will get better results. It's completely within your control. And sabotage, if you know any traders that sabotage, I knew a trader, he could work his account up to, I can't remember if it was 100 or 200 grand. I think it was 200 grand, but he would work it up to 200 grand. Boom, magically he'd lose like 60, 70, 80 grand. He could only get to that 200 grand ceiling and then it would fall off. Sabotage is making the same mistake over and over again. And if you're going to blame what's happening on somebody else, then it's going to be really easy to make those same mistakes over and over again. But if you realize that your mistake is actually something that you can change, that you can choose to never repeat it, then this is going to help you. If you know in the Market Wizards book, the Richard Dennis example, he talked about how Richard Dennis was the most famous trader in the world probably at the time of the Market Wizards book. And he, of course, along with his friend William Eckhart did the turtles experiment. You can look that up if you don't know about that. But he talked about how one day he only had a $3,000 trading account and he was trading futures. And so basically he had lost $300 and he was really upset. So he lost 10% of his account. So then he reversed his position. Boom, he lost another $300. And then he actually reversed again and he lost another $300. So he was out $1,000 or a third of his account in one day. And he talks about how if he had had some sort of rule in place where he decided to go take some time off after a horrific loss, and a 10% loss is a horrific loss. A 33% loss is even worse, of course. If he had had some sort of rule to step aside, then he probably would have been able to ride that out better. And he learned from that experience. That experience was, okay, now I know when I have a horrific loss, I need to take time out. That's my new rule. And if you look in the Market Wizards books, you'll see over and over again the same pattern where the trader had a terrible loss and that led to a new approach. They decided to do it again, to do something different if it were to happen again, if they were presented with that. And that brings us to number 3. And this is pretty cool. You can actually relive the past or plan the future in your mind and change it for the better. And here's how you do it. To avoid making the same choices, the same mistakes over and over again, what you need to do is come up with new alternatives in your mind. So what that means is think back to a choice that you had. Maybe, for example, I had one where I had a trade that was going against me and I kept moving the stop. This was something that I did early in my trading career when I wasn't making money, by the way. Definitely not making money. I would move the stop just to give it a little bit more room and let it finally come good. Well, if you think back to these reasons why you made the wrong choice, and for example, number 1 rule is to cut your losses and let your winners run. That's the number 1 rule of trading. And I was doing the exact opposite. I was letting my losers run and I was cutting my winners short. So what you do is you go back to that point where you were thinking about where you're doing that and that choice that you made that did not lead to profitable trading. So think about what could I have done there? Like just before it went bad. So the decision point, when I decided, for example, I said, you know what? I'm going to move this stop. It looks like I'm going to get stopped out. I'm just going to move this stop another 50 pips and see if I can survive it. Oh no, it's coming up again. Okay, it was a sell trade. Okay, I'll move it up a little bit further. Oh no, it's coming up further. Oh, I'll move it up a little bit further and so forth. So I did this and I was a catastrophic loss. It was terrible. But if you go back to this point and you think, could I have made a slightly different choice? Maybe I could have. And see what could have happened then. Well, do this over and over again. Go back to that critical point in time and say, well, what if I had done A? Then this would have happened, then this and that and that. What if I had done B? Then that would have happened, then probably that and that. What about C? So you can go back to these critical decision points and see how your paths diverge there. These mental gymnastics can really help, because later on, when something pops up, you'll now have these behavior tools in your mind when you're at that critical juncture. Say, well, I could do this or this or this or that or that. If I do this, then that'll happen. So you're seeing that you're at the choice. It's your responsibility to choose the right thing at that right point in time. Now, this is very different to saying, if I had only done blank. So if I had only kept my stop loss, everything would have been fine. No, we're talking about actually thinking about it and acting it out in your mind. What would have happened? You must go back to the choice point, not the mistake, but right before you made the mistake, when you had to decide. That's the critical point. So now what you can do is you can jump to a future event where you know something's going to happen. Let's say, for example, you know something exciting is coming up. Maybe you know that you're going to get some money and you're going to start trading it. So you want to jump to the future and go, okay, now what am I going to do when I go there? When I get to that decision point, what could go wrong? What if I do this? What if I do that? Now, when you come upon this choice point in the future, you're prepared. You're ready to do it. And you know, for example, that you have 3 distinct choices because you've already worked through it in your head before. There's a really great story about the quarterback Drew Brees. He plays in the NFL in the US, plays for the New Orleans Saints. And he actually goes through the plays. They have these scripted plays in gridiron and football in the States, as you probably know. They're highly scripted. And so, and depending on what the other team does, your play changes as well. So it's very complex. And so what he'll do in his mind is he'll go through all the plays that he knows that his team's going to run through in the game. And he will actually, in his mind, envision that he's going to throw the ball to player A. Then he'll run through the same play in his mind. And then, oh no, I can't throw it to player S. I'm now throw it to player B. So he'll run the same plays over and over again, expecting different things to occur. And then how would he react, right? That's exactly what we're talking about. And you can do the same in your trading. You can do it in the past to see that it's really your choice and your responsibility. And you can do it in anticipation of the future. For example, I have some friends that are trying to work out. They want to trade money for a fund. So they know that they have to qualify. Well, this is a great opportunity to use something like this. Same thing. If you know you're going to get some money and you're going to use that in trading, same thing. We're going to talk about all this sort of stuff in the Small Account Big Profits course. If you want more information on that, if you want to get in, you can click the link down below this video or wherever it is, somewhere around here above it, I think, and you can get more information about that. I wish you very happy trading. I hope that these 3 mind tricks help, and we'll see you in another video. Okay, take care. Have a great day. Happy trading. Bye.